Hello guys. Now last video I have done um, a video around commissions and how you can save money from choosing your broker and from not trading too much. Okay, so in this video I will try to show you something that it is hidden, that a lot of beginners they don't know about it, or they forgot about it, or they don't know that it affects their return on investment. Now return on investment, this means that when you are trading you are looking for money, right? So if you don't see your expenses, you will end up losing a lot of money from your account, and most of the time you don't know why. So here I will give you an example of the bid and ask. I will give you an example of stock comparison. Okay, suppose that you want to buy a stock. The stock, when you want to buy, you look for the ask, because this is what the broker asks you to pay. You pay, for example, $20.01. Now if you want to sell, it's $20, so you lose 1 cent for each share. Now why do you have stocks that have just 1 cent, which is as the spread between bid and ask? This is called spread. Okay, this is the spread between, you find the spread is only 1 cent. Okay, which is the best thing in trading? Is just to find stocks that have high volume. Now what does it mean, high volume? A lot of people see the volume for trading. For me, I see volume in order to see if the bid and ask is too low, like this, 1 cent or 2 cents or 3 cents. It means it is too low. Let's say you buy 100 shares, the stock is $20.01. So how much you lose? You lose only $1 for this trade. Okay, the spread, you lose only $1. This $1, now you tell me, oh okay, I just buy, but I don't want to sell right now, so I don't lose. No, you lose. You lose because always when you want to sell is lower than when you buy. Okay, it's like this. So whenever you buy, you see a loss of $1 in your broker account. Okay, go to your trade and you will see it with red and says -1. Okay, just when you begin trading. Now suppose that you do 30 trades a month. How much you lose? You lose $30. Okay, so each trade you lose $1 because you buy, for example, only 100 shares. Let's say you are always buying 100 shares for any stock, and all the stocks that you buy, we have only 1 cent spread. It means if you want to buy, it's $20, 1 cent. If you want to sell, it's $20. Okay, so you buy this. Now you lose only $30 in a month if you do 30 trades. Now suppose, second example, you have a stock with low volume. Now example of these stocks is penny stocks. Now penny stocks are in general under $5 in general. Now stocks under $5, if they have low volume, it means just thousands of shares. Let's say, for example, you find a stock that it is like let's say 56,000, okay, or what you say 56k. You find it in a chart like this, 56k. Now 56k, it means 50,000 shares traded in a day. This is a very low volume. It means traders are not interested to trade this stock. They are not interested. That's why the volume is so low. Okay, now suppose that the bid is $1, the ask is $1.10. Okay, this is the bid and the ask. It could be more, it could be less. Now if you buy 100 shares, how much you lose? You lose $10. $10 is too much in when you buy 100 shares. Why? Because the bid and ask is wild. Here, the bid and the ask, okay, the bid and the ask is, which is called the spread, is let's see, is 10 cents. Okay, now 10 cents by 100 shares, you will end up paying $10 for each trade. Now you find this minus $10 in red in your broker account when you buy the stock. Okay, you find it in red. It's not in green. You are not making money. You are losing money. Now suppose that you do 30 trades a month. How much you lose in a month? You lose $300 a month just because you trade penny stocks. You see now the difference? Okay, you see the difference? You are trading good stocks with high volume. You pay $30. You are going to go to cheap stocks under $5, and with low volume you will get $300 paid each month. That's why when you look at your account, most of the time you see that your account is going down. Maybe it's not because you are a bad trader, just because of the bid and ask spread. And this is called, maybe you find another word for it, this is called slippage. Okay, maybe some people who know the word, it's called slippage. It means just the difference between bid and ask. Now, what you should do, now what I advise you is, or what I tell you to do, or what's my opinion is, it's better to have a good capital and go and buy good stocks that have high volume, and that's why you will not lose too much money from the slippage or from the bid and ask difference. Now if you stay with this, okay, suppose that you buy 1,000 shares, you will end up losing $100. 100%, you will end up losing $3,000 for 30 trades. Okay, so this is just an example how you can lose money by choosing to trade some kind of stocks. So my opinion is, try your best to see stocks that have less spread. Like 1 cent spread most of the time is good. Okay, and if you have 2 or 3, it's more or less. But if you find 10, 20, 25, some they have more and more. Okay, so you are losing too much money from this kind of spread. Now, as I told you before in the last video, commissions plus slippage, it means bid and ask difference, you will lose too much money and you don't know that you are losing too much money. This is the problem. You don't know. You have never entered to your account and check what the broker is taking from you. You buy and you sell, you buy and sell, you buy and sell, you do a lot of trades, but you don't know what you are doing and you don't see what you are doing. That's why you end up losing each year money. Okay, so thank you very much for this for watching this video. If you have any questions, just ask. Thank you.